Hey guys, Bryan Lebo here with your April Las Vegas market update video. Now, normally we don't have the median price conversation until about halfway through the video. Today, I'm going to start off on this topic because I really think that we're only a few months away from a potential change in the way the media, and therefore the public, perceives the Las Vegas market. If you've been watching me for a while now, you know that over a year ago, I predicted relatively flat year ahead for home prices. While my prediction proved to be true, what the public has been reading and watching in the media has been exceptionally misleading. To most people, perception is reality. So the media's portrayal of our market is very influential on buyers, sellers, and sometimes even realtors themselves. While I touched on this subject last month, I'm about to go a bit more in depth right now. Let's first take a look at the current median price versus the previous months. As you can see on the screen now, we ended March with a real median price of $217,500. This is down about 1% from last month's total of $220,000. Now, notice I use the term real here. The reason I say real is because what the media reports is very misleading and in some cases completely false. MLS sales are typically used to reflect resale or used homes. Meanwhile, several other companies track the analytics on new home sales. Well, depending on market conditions, sometimes new homes make their way onto the MLS if the builder has standing inventory that they can't sell. Well, unfortunately, our association doesn't really filter these new homes out when they provide these statistics to the media. As a result, these new home sales blow up the median price. As the market softens, builders have more standing inventory, and thus more new homes are placed on the MLS. Now, when we discuss resale homes, I immediately filter out new homes to get a more accurate depiction of the resale market itself. Consider this. Last month, we had 2,734 homes sold on the MLS. Now, this number includes new homes. As a result, the median price is $220,000. But the truth is that 106 of these homes were actually brand new homes. Guess what? The median price of these new homes was roughly $315,000. So as you can see, that's a pretty big difference. Now get rid of these new homes and we're back down to 217,500 instead of 220. Now why does this matter? Well, let's go back to our median price chart. Going back almost a year to last June, you can see that we peaked at $220,000. So the real truth here is that since June of last year, home prices are actually down marginally. We're talking 10 months of zero appreciation at best. In fact, we're going the other direction, since last month we had finally gotten back up to 220. Now let's check out an article from the Las Vegas Review-Journal from 4 days ago. Here you see the headline, Southern Nevada single-family home prices rose 7.3% for March. Now, if you factor in the new homes like they did, this is actually a very true statement. But this is not, however, indicative of our reality. Nobody cares about the market last March. People want to know what's happening in our market right now. The greater truth is that our market has simply stabilized finally. Last year, and typically in general, July is the strongest month for sales. Unless our market just goes through the roof for no reason, once we get to July, the headlines will have to move from promoting fantasy to the reality of stability. While I think this is going to be a great wake-up call for unrealistic sellers, this could have some stronger implications from investors who feel it's time to get out since there's no more appreciation to be had. Okay, now let's get back on track and follow up on the rest. While unfortunately the median price went down, sales, however, blew up to 2,628. This was a 6% increase over last year's sales. So this is great because it shows that demand is still very high. All right, next, let's talk about our supply levels or inventory. As you can see on the screen now, we ended the month with 7,074 homes on the market. This resulted in a 2% drop in inventory. Not really a dramatic number and almost identical to last year's inventory levels. So let's just say that inventory levels are stable. Now let's break down this inventory. As you can see on the screen now, about 9% of our market are still short sales, about 3.5% are foreclosures, and almost 88% are normal or traditional sales. Looking back, short sales are about a point less than they were this time last year, while foreclosure sales remain completely unchanged. Are you sensing a theme here yet? Yes, stability. Okay, last but not least, let's check out the foreclosure activity, or notice of defaults. As you can see on the screen now, the full records only run up to February. Unfortunately, the county is so backed up, or short-staffed, that we're still missing the last week of March's numbers. But looking at the numbers up to March 22nd, I can tell you that the final numbers should be pretty identical to February and the previous few months before that. Like I said, almost 2 years ago, I really don't see foreclosure activity being any kind of an issue anytime in the near future for us. Okay, so let's go ahead and wrap this up. Sales are brisk, median prices have been stable for almost a year, inventory took a minor dip, but nothing really to be concerned about, and foreclosure activity is borderline dead. So what's really going on in the market? As much as we like things black and white, the market is exceptionally gray right now. There's basically 4 market segments which generally dictate demand and current values. So first, you have homes in Summerlin and Green Valley. Second, you have everything outside of those 2 areas. Third is the low end of the market. And fourth is everything else. As you saw earlier, when I discussed the influence that new homes have on median price, you saw that the median price for new MLS homes was $314,000 last month. I think the real median price for new homes is actually around $350,000. Where I'm going here is that there aren't very many affordable new homes on the market anymore, that are new at least. So going back to my 4 markets, the low end of the market is in very high demand. Homes priced under $200,000, or say $250,000 in Summerlin and Green Valley, are basically just vaporized within days of being listed. If they're priced accurately, I should add. There's a very high demand for these affordable homes, and there's actually no competition from new home developers. So as you increase in price, there become less and less buyers for every home until you reach the luxury market. As you increase in value, you find less and less potential buyers. So furthermore, the areas like Summerlin and Green Valley are selling substantially faster than homes throughout the rest of the valley. What's most bizarre is that I know a few Summerlin neighborhoods where low-end homes have increased like 25% in less than a year. Homes that used to be like $180,000 are now $225,000 and more all day long. Meanwhile, several neighborhoods in Summerlin where the homes were selling around $600,000 are actually down to about $550,000. So this really illustrates just how very specific real estate can be and why having a knowledgeable realtor can make all the difference in your approach to purchasing or selling. As our market has actually finally stabilized, the concept of value has adjusted greatly. This is why some neighborhoods and price ranges have increased while others have decreased. Take the emotion out of a hot market and you find that logic starts to dictate home values again. So moving forward, if you're looking to invest in areas like Summerlin or Green Valley for investment purposes, or you're simply looking to buy a modest home, there's a tremendous sense of urgency that I really don't see slowing down too soon, since we're entering the hottest time of the year for real estate. Meanwhile, for sellers on the higher end, the key word here is value. Buyers are no longer willing to pay top dollar unless the home is worthy of a top dollar offer. If your home doesn't have offers quickly, you need to reconsider the list price and or review how your home is being marketed. Because at this point, Homes are no longer just selling themselves like they did in the past. All right, well, that's it for this month's video, guys. Thank you again for watching. Enjoy the spring weather while it lasts, and have a wonderful April, everyone.